Point being, whatever this wave of capital flows into or maybe stays within, it's a pretty big wave.
Yeah, it is.
Okay.
So here's the wealth in America today. So we can see half of the chart, 50%, is boomers. And look at millennials, that's just 9%. And you have to remember, it's going to go from the boomers to Generation X, ultimately to millennials. But what is really quite startling is, since we're running out of time, I think we could just probably shoot ahead, Ryan, to the next slide. Well, this is, first of all, how boomers hold their money, where they hold it. So we can see a lot of equities, a lot of real estate, some pensions, as you would probably imagine it would be, right? Where they keep their wealth.
I mean, look, real estate stands out to me in the sense that you look at where home prices are today, or you look at what median home prices are up year over year, right?
Yeah.
I mean, we've seen, since post-COVID, we've seen increases of, call it maybe 20% in terms of price increases year over year. We talk about an affordability crisis. You don't have enough supply. Demand is relatively stable. And interest rates obviously play into that in terms of the affordability. But generally speaking, if you bought a home in 1950, 1960, 1970, I mean, go back however long you want, even just a few decades ago, it's obviously very likely that it's worth a lot more money today versus what you paid for it.
A tremendous
right?
amount more. I remember that, I don't know if you remember, I think you sent me the Bitcoin debate with the Scaramucci. But he told me his parents bought a home, I think it was for, I don't know, $30,000.
Okay.
He said today that home is worth over $600,000.
So it makes sense. And you've seen similar asset price inflation in equities, right? And obviously we can point to the profits that companies make, et cetera. But generally speaking, there's a lot more money in the system. It's gone into various assets. There's been asset price inflation. And people that have held assets for longer periods of time are much wealthier than anybody that hasn't held assets for those same periods of time, right? Well, I mean, pretty straightforward.
The main reason behind this, the reason they have opportunity was because we had a not very aggressive Fed during the time. The dollar wasn't perpetually shedding value as it has been over the last 5-10 years in our generation. That is why younger people can't afford to buy homes, because they can't keep up. Their wages can't keep up with inflation. So they're always left behind.
Well, and you've had a pretty robust economy for decades and decades now in the United States that has benefited everybody, but certainly has played a role in overall value accrual.
Yeah. Again, this is just kind of, we're running out of time, so we can't go into all these in details, but this just shows you kind of the historic chart of wealth. We're looking at Generation X in orange and boomers in blue.
Okay.
But you can just see how that's just kind of...
Well, you point me where to go here with the slides as to how it relates to potential inflows into Bitcoin or other crypto assets, or just what assets might be favored by millennials who are now going to be in control, or at some point over time are going to be in control more of this, the size of this asset.
Let's go to the next slide.
Okay.
This is the beef of it. So on this slide, we can see on the blue, younger people, red, older people. And this is where they keep their money, where they think potential is, where they're investing. Okay, and this is from a study of wealthy Americans from Bank of America. This is Americans with $3 million in wealth or more. So including people that are very well off. Very, very well off. Have a lot of investable assets. But if we remember, going back to that first slide, the top 10% of Americans are going to manage more than half the wealth. So this is a very large number. Okay. This even though it's a small percentage, the money that they hold accounts for more than 50% of the wealth in America. So what stands out to you most here? Well, I mean, I look at 44 plus, their number one investment choice is domestic equities. Okay. 41%, which makes sense. Sure. But then if you go to 21 to 43, domestic equities slides all the way down to 14%. That's interesting. So you're saying here, at least what this is illustrating or highlighting, is younger individuals that are also very wealthy, given this study, they're not invested in equities. More so, they're invested in real estate. Real estate, which makes sense. Crypto or digital assets. Crypto is number 2. And that's the other thing, Ryan. For young people, crypto is number 2. Yes. And for older people, crypto, look at that. We go from 28% for under 43, over 43. It goes all the way down to 4%. So younger people very much favor crypto, especially affluent or rich young people. So that's going to give you any indication of that flow of money over the next 20 years, probably more like 40 years. as the money drips down to our generation.
What's also really interesting to me here, and maybe this is what contributes to the wealth, personal company or brand, investing in yourself, there's a degree of, entrepreneurship, and then direct investments into companies, people that have made money, maybe investing in, other opportunities that are presented to them because they have that capital, kind of the VC approach, obviously. That's interesting. Maybe it's a reflection of something else.
I noticed that too, that personal brand for younger people was above direct investment in companies, where that's obviously the opposite for older people. So it just shows you, which I think is a good thing, because it shows entrepreneurship. It shows, a more competitive landscape. You want as many different competitors as there can possibly be for an economy to be healthy. And I think we're seeing more of those today.
Okay, well, younger people can take more risk because presumably they're going to live longer versus where they are here today in terms of their age. Compared to someone that is 75 years old, they're going to take less risk, right? They're not maybe going to be invested in crypto. I'm assuming the point here is that we can front run this flow if we think that there's a generational risk transfer or wealth transfer, and that wealth is going to go into assets as indicated by what people's investment preferences are.
Yeah, well, let's skip ahead to not the next slide, but the slide after that. And we can take a look here at how much money is actually going to go into crypto. So we can tell right now where the money in crypto is today. Okay. So boomers and older, 45 billion, right? Remember, they're huge proportion of wealth they have. They put 45 billion. Millennials and younger, 295 billion. And this is only in America, which is 35% of
and I think that's an important point, because when you think about what Bitcoin is, right, in terms of US dollar asset exposure, it is globally accessible, much more so than NVIDIA or Apple stock. We are very privileged in that as US citizens, we can come to tastytrade, we can very quickly open an account, and I can get that exposure, whereas, I don't know, pick your country, Taiwan, right? Yeah. Not as easy to get that exposure.
Very controversial country to pick, Ryan, but
not as easy. France, not as easy to get that exposure, generally speaking, to Apple stock. A hell of a lot easier to buy Bitcoin as well. Maybe that changes. Maybe it becomes much more accessible over time. I'm not saying it's impossible for people in other countries to obviously invest in the U.S. equity market.
It's going to make it a lot easier.
But it's just not as easy as it is for somebody that's a U.S. citizen.
Yeah.
Right? And so maybe that plays a role here too, or at least it's something that we shouldn't overlook, in that this is a global asset. There's a finite amount of it that will ever exist. So there's a degree of scarcity here. And it's preferred by a younger generation that's going to come into some significant wealth as a function of time.
Right. And if these expectations, if these beliefs stay the same for the next 30 years or so, I did a little bit of math, that is going to reflect probably a tenfold increase in the price of Bitcoin. And that's assuming, because remember, this 295 billion is only US. So there is a wealth transfer happening on the global scale as well, but we don't have any insight into that, so we're only looking at the US.
Okay.
It doesn't have the same magnitude that we have, but I know older people in Italy and France, and the seniors over there really do not like cryptocurrency. I know
you learned that.
I learned that
on
your
trip. Travels.
They very much do not like it, but the younger people do like it.
You got kicked out of a bar, I think, when they asked you what you did, right?
I did. Yeah. But whatever.
It's not for everybody.
No. But they tend to be very conservative and very traditional in how they interact with life. So I think I don't know how the price of popular cryptocurrencies like Bitcoin and Ethereum couldn't go up tremendously over the next 30 years based on these numbers alone, assuming nothing changes. I know that as you get older, your risk tolerance goes down. Does that going to mean that their proportion of Bitcoin in their portfolios? I don't know. But even if it goes down by 50%, we're still going to see a significant rise in the price of digital assets.
Well, I think that's an interesting look at the dynamics here behind the generational wealth transfer. That we're not the only ones talking about this. Obviously, it's a theme. It will continue to be a theme in financial markets over time. That is a good trade idea for today. 30-year
long-term
duration.
You want to make another bet?
If you got a 30-year time frame, we're betting on higher Bitcoin prices
All right.
based on front running the generational wealth transfer.
All right.
That's our
30
trade
years
for
from,
the day.
Let's do a 30-year Bitcoin price bet. Over or under $1 million?
I'm going under $1 million just because I think that's the easy trade. So we'll check back in 30 years.
All right. I'm going over $1 million.
Okay.
Another $100 bet. I'm going to be 71.
Yeah, your $100 is going to be worth like $5.
Are we going to do an inflation adjusted $100?
Whatever you want.
Let's do an inflation adjusted because this is going to be nothing.
Okay.
All
Inflation adjusted.
$100 adjusted for inflation.
Yep.
30 years from today.
Okay.
So July 17th, 2064.
It would be like $170 or something.
2054.
Yeah.
Okay.
Okay.
All right. That's
Sure. I'm under $1 million. Mike is over $1 million, but that's why he's Mad Mike. He's crazy, ladies and gentlemen.
Where do you think you're going to be in 30 years?
I don't know, man. Don't even want to think about it. Hopefully right here doing the show.
The new format is going to be no actual hardware.
Yeah, I'll be in the metaverse.
Doing it. Yeah.
All right, that's going to do it for our show. It is 5 o'clock p.m. Central Time. That's Chicago time. Victor Jones is up next with The Price of Truth. Stay tuned. I'll be back on Monday with my man, Frank Caberna. Mad Mike will be back on Wednesday next week. Until then, thanks for watching. Peace.